Hey everyone, welcome back to Corporate Decoder, the place where we take those boring corporate filings and turn them into something you might actually want to watch. Today we are diving into the high-flying world of New Horizon aircraft. Get ready because this story involves votes, shares, and a company trying to reach new altitudes, but will they crash land? Let's find out. This is an 8K filing, which is basically a quick update a company gives to investors about significant events. This one is from New Horizon Aircraft, and it's all about a shareholder vote that happened in February. Scroll date of report, date of earliest event reported. VSPAN ID equals XDX 905 edit document period and date C 20,250,226, 20,250,226, ZIIPEIWVJE non-numeric context ref equals, as of 2025 to 2 to 26, format equals X, date month day, document period and date February 26. 2025 non-numeric span B scroll. So on February 26th, New Horizon Aircraft had a special meeting where shareholders got to vote on something pretty important. A conversion proposal. This proposal was about converting preferred shares, which are like special shares that have certain advantages, into regular shares. In this case, it was series of preferred shares, and the vote was to approve the option for these to turn into Class A ordinary shares. This relates to a securities offering, which means they sold stocks that happened back in December. Why did they need a shareholder vote? Well, it's because of Nasdaq rules. Nasdaq is the stock exchange where New Horizon aircraft shares are traded, and they have rules about when a company needs to get shareholder approval for certain actions, like issuing a lot of new shares. This is to protect the existing shareholders, so the company can't just suddenly flood the market with new shares and dilute the value of what everyone else owns. If you wanted to know all the nitty-gritty details, they were laid out in something called a proxy statement, which they filed with the Securities and Exchange Commission, or SEC, a few weeks before the meeting on February 4th. A proxy statement is basically a document that companies send to shareholders before a vote, explaining what they're voting on and why. Now let's get to the voting results. It's like election night, but for business. There were over 31 million Class A ordinary shares out there, but only around 27 million were actually eligible to vote on this proposal. Out of those eligible votes, about 39%, which equals to 10.6 million votes, were represented at the meeting, either in person or by proxy. A proxy is when someone gives their voting rights to someone else to vote on their behalf. This 39% was enough to make it a valid vote, meaning they had a quorum. Quorum is like the minimum number of people who need to show up to make the meeting official. Here's the big reveal: the shareholders approved the proposal. Over 10 million votes were cast in favor, while only about 331,000 were against. A tiny fraction, just over 19,000, abstained, which means they didn't vote either way. There were no broker non-votes, which happens when brokers holding shares for clients don't vote on certain issues. Now, what does this all actually mean? It means that New Horizon Aircraft now has the green light to convert those Series A preferred shares into Class A ordinary shares. This could have several implications for the company and its shareholders. First, it changes the company's capital structure, which is how the company is financed through debt and equity. More specifically, it increases the number of Class A ordinary shares outstanding. This could dilute the ownership of existing shareholders, meaning each share represents a slightly smaller piece of the company. Second, it could impact the company's financials. Depending on the terms of the preferred shares, converting them to ordinary shares could change the company's dividend obligations or other financial commitments. Finally, this move could signal something about the company's future plans. Maybe they're planning to raise more capital or make an acquisition, or maybe they just want to simplify their capital structure. New Horizon Aircraft is a company focused on developing a hybrid electric vertical takeoff and landing aircraft, also known as VTOL. In simple terms, they are trying to build a plane that can take off like a helicopter and fly like a regular plane, but using a combination of electric and traditional engines. These aircraft could be used for a variety of purposes, such as air taxi services, cargo delivery, and emergency medical services. It's a hot area of innovation right now, with lots of companies trying to create the next generation of air travel. Looking at the numbers and what this all means for New Horizon Aircraft, it seems like this vote went smoothly and according to plan. Getting shareholder approval is a big step in making this conversion happen. However, as investors, we should be asking, what's the long-term plan? Will this conversion lead to more growth and innovation, or is it just shuffling things around behind the scenes? One risk to consider is the potential dilution of shares, which could lower the value of existing shares. On the other hand, the company could get stronger through better funding and a simpler financial structure. Overall, New Horizon Aircraft is at a key point. The success of this conversion and their ability to execute their hybrid electric VTOL strategy will determine their future. It's a high-risk, high-reward kind of situation, and investors should keep a close eye on how things develop. Thanks for tuning in to Corporate Decoder. If you liked this deep dive, hit that like button, drop a comment, and subscribe for more breakdowns of the corporate world. Until next time, stay informed.